The credit float hack. This is one thing that loan officers won't tell you when you're buying a home. Let me show you how this works. Let's say you're buying a home for $600,000 and you're putting 10% down, borrowing $540,000. Most people will tell you to go with the lowest rate with paying no origination fees, which I agree with. However, there's better you can do. If you look at this example, I'm giving my borrower 30-year fix at 6.75%, increasing their monthly payment by $220. But in return for getting the $220 increase, they are getting a lender credit of $7,400 for taking a slightly higher rate of 6.75. Now, the way to think about this is their closing costs are going to be approximately $12,000. So by reducing it by $7,400, they're only paying $4,600 at time of closing. What does that do? That gives them additional cash flow. Now the hack is, what do they do with that money? If they take that money and invest it in some investment vehicle, and they'll get a rate of return. So the way to look at this is, at $7,400 is what they're getting as a credit, but it's costing them $220 per month. That gives them free money for about 34 months. Now, the cost of capital on this is 0.625, which is just the difference in the two rates of 6.125 and 6.75. That's their actual cost, the interest that they're paying, the additional interest that they're paying on the money that they're getting, the $7,400. But we know that over that 34-month period of time, if they took that money and put it in some sort of investment vehicle, most likely the rate of return is going to be anywhere from 6 to 7%. That means they're going to be netting about 5 to 6% just in interest on that money instead of putting it into closing costs. Credit float hack works every time.